Let's break down today's action with Pete Lang, Lang Capital president. He's here to tell us why he's warning of what he calls a significant pullback. Tim Gramatovich is Paradis Asset Management Chief Investment Officer. He's got two ways for you to play rising oil prices. Phil Flynn, Price Futures Group Senior Market Analyst, lives and breathes the price action. He's here along with Bob Iacchino, Tethys Partners Chief Market Strategist, live from the CME and the pits. Hi, Bob. I want to begin with you. Let's talk about how we saw gains today and what propelled them.
Well, you know, it's interesting. I think with today, you're looking at a situation where there was a lot of short covering off of some of the selling the last day or so. Traders love to talk about these Friday moves, but I think it's very, very, very realistic today. Considering what's going on in Iraq and how that can escalate in a day or two over the weekend, I don't see anyone holding positions. You heard the bell at the New York Stock Exchange, and I heard a bid in here behind me. So you're seeing that continue into the close.
All right, we're going to talk about Iraq. We're going to talk about oil quite a bit because it's important. But I want to go to Tim real quick, and I want to ask you about this. As we pay attention to stocks, volume was light today, even though we closed up on the Dow. A lot of people are going to take this as a sigh of relief, but is it really time for there to be a sigh of relief? You think the second half is going to be much harder on equities, don't you?
Tim?
Adam, was that directed to
Tim? Yeah.
Was it direct? Yeah, yeah. I think it is. I think that the reality is we've kind of pushed the envelope on valuation in a lot of asset classes. I mean, certainly, we're primarily focused on the leveraged finance game as it relates to high yield and leveraged loans. Equities are, they look stretched given the fact that growth is going to be very, very tenuous in the second half. And I think everything that's going on with energy prices, which we've talked about in the past, is just another really heavy weight for the consumer to carry going into the second half of the year.
Pete, why are you worrying about a significant pullback or a correction? I ask because we've gotten decent data, certainly. When I talk about that, I'm thinking durable goods numbers were good. We've got first-time jobless claims week by week trending slightly better. What are you so worried about?
Well, the bottom line, Liz, is that we're beyond simple portfolio management at this point in time. The Fed has kept interest rates so long for such a long period of time, and they've injected so much liquidity in the market that stock prices are quite euphoric right now. And when we look at what they're requiring corporate America to do, they've got to justify this increase in stock prices. The only way they're going to do that is to show earnings, and we just haven't seen those earnings. So we've got a big potential drawdown risk, Liz.
Pete, let me ask you along that vein of the earnings. I mean, the company's going to have to manage their earnings, but they're not paying attention to revenue. It's as if revenue has actually been flat in a lot of ways, and they've been juicing their earnings during the last reports.
Well, I absolutely agree there. But the bottom line is not only do we want to see earnings growth for the second quarter, we also want to see earnings growth for the first and the second quarters. This is a big problem going into the summer. The other potential problem is the end of quantitative easing. I see two really big problems with that. Number one, U.S. markets are going to have to compete with investment dollars against the United States government, who's going to be issuing untold amounts of securities. And second, the stage is going to be set for increasing interest rates. This all has me quite concerned going into July.
Well,